I think that a 1031 exchange is like the most overhyped thing in real estate. I have kind of solved that by not selling. You have solved that by having this other structure. But you hit so many nails on the head there of 1031s. We also have a real estate brokerage, and I can't tell you how many calls we get of, I just have to buy anything. Like at this point, I don't even care what the price is. I've just run out of time. I need to do something because of the timelines in 1031s. And so I think they're a useful tool in the tax code. I think everyone should know the tax code very well and think about ways that you can leverage it to your best advantage. But I personally think a 1031 is very overhyped. I think it's been a major distraction for a lot of people. I think it, sounds really good and seems really glitzy and like it's going to solve a lot of problems, but it creates other problems largely because of the time constraints on it. Now there's just not a lot of deal flow because interest rates are high. And a year or two ago, there was more deal flow, but there were so many people competing for it that people had to make some tough decisions to meet the timelines of their 1031. So I love that, we've both kind of solved a tax problem in a different way that's not a 1031.
Absolutely. And I would love to have like a webinar and really geek out with you about this. Like this would be really fun. And
we might be like the only two people in the industry that don't like 1031s.
Yeah, well, it is a battle, right? Because there's 5,000 QI companies that are out there just banging the drum of like only 1031, only 1031. And I just went through the '08 crisis. And by the way, I love 1031s when the deal makes sense, when you wanted to buy it anyways. And you found, all the stars aligned, like, man, it's incredible. It keeps a stepped up basis. It keeps you growing your wealth, right? And that's a win. That's great. But when the '08 hit, before that, people were overpaying in '04, '05, '06, and then basically the music stops in like '07. And then people lost everything. I mean, friends and family and clients lost everything. And I'm going, this doesn't make any sense. And it's because they were over leveraged. They had too much debt, not enough liquidity, and they ran out of time, and they had to just, fire sale or just get foreclosed on. And this is mostly in California, boom bust state for real estate in some ways, in Sacramento. So it's kind of unique, but it left a part of me to say there's got to be a better way.